Hello, ladies and gentlemen. Casey O'Rourke here at Fross and Fross Wealth Management, bringing you this week's economic and market update on Monday, February 13th, 2023. Before we get started, please take a moment to view those disclosures attached within the email, or if you're on social media, please go to the website www.frossandfross.com. And remember that anything mentioned in today's video should not be taken as a formal recommendation. If you do have questions, feel free to reach out to us anytime. So the topic of conversation lately is the return of the debt ceiling. I'm sure that's been a buzz out there lately and causing a little bit of concern. So on January 19th, the United States officially hit the debt ceiling. Now, you probably didn't notice anything different when you woke up that day, and you probably won't for a little bit, but let's talk about what's behind it and how we can be prepared for it. The debt ceiling is the total amount of money that the United States government is authorized to borrow to meet its existing legal obligations. These obligations include everything from Social Security, Medicare benefits to tax refunds, military salaries, and interest rates on Treasury bonds. The debt ceiling then is the limit to what the government can borrow to pay back what it already spent. Normally, raising the debt ceiling requires a simple act of Congress. However, we know that's not always the case. And some years, however, politicians in Congress disagree about whether the ceiling should be raised or not. When this happens, we get a debt ceiling crisis where the nation comes perilously close to defaulting on its debts. The most nerve-wracking of these crises occurred back in 2011. Unless things change very quickly, 2023 is setting up to be the most bare-knuckled fight since then. So, what happens if the U.S. defaults on its debt? A lot of people ask that question, and really nobody knows for sure, but we do have a good idea, and it isn't pretty. So far, clever accounting we call extraordinary measures have bought us a little bit of time. These tools help the government pay its bills without actually authorizing new debt. However, it's just like replacing a flat tire with a spare one. It'll get your car to the shop, but sooner or later, you'll have to get a new tire. That's the bottom line. The Treasury Department estimated the clock would hit zero no earlier than June. So what will happen before then? Up to this point, the markets have been fairly calm because right now, investors are more concerned about things like interest rates and inflation and the assumption that Washington will actually get its act together and raise the debt ceiling like it always has in the past. However, we expect the markets to get more nervous the closer we get to the June deadline. For the moment, we don't see a need to make a major change, and we certainly don't think you need to feel any stress about the situation right now. Should anything change, we will let you know immediately, and we'll keep you up to date on the situation as we get closer to June. While Congress may be in the habit of waiting until the last minute to get things done, that's not how we work here. We are committed to being vigilant and proactive as the months go by. And remember, if you do have questions or concerns and you'd like to consult with us, feel free to reach out at 352-205-7800. And remember, anything mentioned today is not a formal recommendation. Hope this video finds you well, and hope you have a fabulous week ahead.